Welcome to This Week in Coworking, where industry leaders get succinct, actionable insights. Here are your hosts, Hector, Kolonas, and LaRosa.
Hey everybody, and welcome back to the This Week in Coworking podcast feed. Today, we're recording a weekly recap episode. It's myself, Hector Kolonas, joined again by my co-host, LaRosa. And today we're joined by a guest co-host, Rado. Tell us a little bit about yourself and what you do at OfficeRnD.
Hey everyone, thanks for having me, Hector. So my name is Rado. I work for OfficeRnD for almost like 6 years, even more. Currently part of the product team at OfficeRnD. And in the past couple of months or a year, I've been focused on building our new e-commerce oriented product called Growth Hub that we launched yesterday. And we're looking forward to expand it and make it even better.
Love that. Rado, thank you for joining us and thank you for being the sponsor of this week's newsletter. You're actually putting together a webinar on March 27th talking about how e-commerce can help co-working spaces. Can you tell us a little bit more about what folks can expect at the webinar?
Yeah, absolutely. Growth Hub is, although we launched it yesterday, it's just the beginning for us. So we consider e-commerce to be a very interesting topic and something that we as a vendor need to expand on. Maybe just to share some data, recent research that we did shows that almost half of our customers consider e-commerce solution either like an essential for their further growth or a high value for that. So that's why we're putting more and more attention to that topic, and we want to expand our offering that helps operators sell online. And in that regard, we're hosting a webinar on March 27th. Where I'll be joined by our CEO, Miroslavo, and one of the very early adopters of the Growth Hub product, 14 locations operator from UK, who is already seeing very good results from using the product. So we're going to talk about e-commerce in general, e-commerce in the co-working world, how they relate to each other, what are the gaps. Then the operator is going to share a part of their experience with the Growth Hub and e-commerce in general. So we'll try to show like the perspective of the vendor, the perspective of the operator, and what kind of place e-commerce has in our industry going forward.
Love that. And just for everybody listening in, Rado, this is your first podcast episode ever recorded in the co-working world or in general. And you've been in this industry for 6 years. So thank you for joining us and for sharing and for jumping in at the chance of kind of telling us more about what you think of the co-working world, both as someone who works on product, but also as someone who uses co-working spaces to do your work. So thanks again for joining us. Mike, welcome back. You were traveling last week. It's good to have you back on the pod. How are you, dude?
Yeah, I'm great. Getting settled into the new home in Orlando. Can't wait to do some co-working in the area soon. It's nice to be back. Thanks for holding down the fort for your own show. And thanks for having me back.
Good to have you back, man. So guys, the newsletter this week was packed with a bunch of completely different topics. So we were thinking before the show, what are we going to dive into? There's so many things happening around the world. Where do you guys want to start?
Well, I'm thinking first off, there's a great post on LinkedIn shared by a co-working OG, Christoph, from Beta House in Germany, now One Co-working. And it really kind of resonated with me. He has 12 really great questions to help you determine what the best type of workspace is for your organization. And I think it's a conversation that we have in the industry a ton that I'm glad to see is finally evolving into, well, that's not co-working towards more of a, well, what type of co-working or what type of flex co-working space is their specialty, or what are they known for? Or, as we've had conversations with others on the podcast in the past, maybe there's more nicheness being applied to co-working uses. People need space to be productive, but they need space to educate, they need space to collaborate, they need space to focus. And this really, I think, helps individuals making decisions for themselves or for organizations or for teams to better manage expectations as to what type of space you might be encountering and how best to choose the right space for you.
Yeah, it's an interesting one because the questions that Christoph put out there are not the generic ones that we keep hearing about co-working. Do you want to be collaborative? Do you want to be in a supportive environment? Do you want beautiful furniture and kombucha on tap? No, this is actually talking about like financials. Do you want a long-term commitment at a kind of assured rate? Do you want a flexibility to scale up and down? Like just talking about the business side of it as opposed to just, the the benefits that are normally sold around co-working. So it's really, really interesting. But I also liked it because it allows people to self-select whether a flex option is the right option for them, right? There are businesses, increasingly more and more businesses are supported by flex-like products or co-working-like products, but it doesn't mean that the neighborhood co-working space is the right place for you or your team. So these kind of questionnaires and these frameworks are definitely helping teams and operators figure out where they should be working, which is really, really an interesting thing to think about. Okay, I'm just coming off the back of the Co-working Alliance Summit, and one of the conversations there was, what do you do when someone's not the right fit for your space? The logical thing is you send them to another space, right? And they will reciprocally pass people back to you. But it's also the same thing with landlords. There are some businesses who are just better suited to rent a traditional leased office as opposed to a co-working operating, especially if you've got limited space. Do you want to fill that space with kind of a corporate client who isn't a good fit for your space? Or do you want to fill that space with someone who's going to contribute to the community and get involved with your events, give back, get involved, that kind of thing? So it's finding that right balance. Rado, what do you think about the questions that Christoph posed? Is this something that you kind of see often from your work with co-working spaces? Is this something that they think about?
Yeah, to be honest, maybe I haven't dig that deeper into in the topic of how they approach presenting themselves, but I can definitely say that we see operators that are very community oriented, and if you are an enterprise that you need more privacy, you need a high level of security, etc., probably a community oriented space is not the right place to be. And on the other hand, if you are that kind of person that is looking to network, to be part of the community that can help you grow, if you're in your early stages, definitely you'll probably want to be in a more like profile-based or techie space versus being in a more enterprise-based. And as a company, we use, I would say, two different. We have two offices in our in the main city where most of the team is, and one of them is very community-oriented, and the other one is more like office-oriented, enterprise level. And as a person, I'm using the more enterprisey one when I need to collaborate with the team, etc. But when I need like more inspiration or just like better environment to work from, I prefer to go to the community oriented co-working space. Let's put it that way. So definitely a helpful list. And I think like if I need to decide what kind of space to look for, that list of 12 questions is perfect to start with and kind of narrow down your search, because there are quite a few spaces out there that you can choose from.
Of course, and obviously it gets a bit more murkier when you've got, this is just traditional lease co-working or flex, right? You've got that middle space that we've talked about a few times in the episode over the last couple of weeks is, you've got like landlord flex, you've got co-working, but you've also got a private office in the building. So it gets a bit more murkier, but this is a really good divide just to know that, yes, I'm considering flexible options or I'm not. That actually brings me to another story we shared this week, and it's quite I would say a viral post in the kind of co-working world. Got over 89 likes and engagements, 25 new comments over the last couple of hours, where someone was kicked out of a co-working space for taking sales calls or making sales calls. And it's just an interesting comparison to that, because if the person knew what they were looking for, they may have self-selected a space where it was more inducive to being able to make calls instead of being put in a position where they get kicked out of a space for making too many calls. Now, that's one way to look at it. The other side to look at it is this folk was joining a space to grow his business, was growing his business, and then in the middle of a sales call was kicked out of the co-working space for making too many calls. So it's a very interesting topic. The debate in the comments is flipping from side to side. I'd love to hear what either of you two think. Should this gentleman been kicked out of the co-working space? Could it have been handled differently? Or should the person have found a different type of flex offering instead of maybe a open plan desk?
I I was so excited to see this type of clickbaity type uh controversial discussion piece in This Week in Coworking. No, I think it what I like about including this type of piece is it asks a lot of questions. And I think, to be fair to everyone, I think we've all worked in our fair share of co-working spaces. I know I can speak for you, Hector. I'm sure, Rado, you've worked in your fair share number as well. There are sometimes those frequent kind of violators that are very loud. Sometimes they talk on the phone loud. I have been told I'm a loud talker as well, right? I also know that I'll never forget one of the first spaces in DC I worked out of, Cove, had a sign that used to remind people that like a one-sided phone conversation is actually more distracting than a two-sided conversation. So like I think that this is one of those posts where someone's trying to get a point across on LinkedIn. I think that he probably had a valid point. My contention with the piece was more so how the space handled the behavior in the moment. Interrupting a member who's in the middle of a phone call, I think, is inappropriate at any time, let alone after hours, right? It is 6 p.m. and he did say that the place was basically empty, but he also does acknowledge, which I think is important to bring up, is that he was familiar with this brand, but at a different location that had a completely different vibe, which reminds me of Polano and Sophia in her conversation earlier on an episode this year about how different spaces have different vibes and feels, right? And so I think it all connects with what we were talking about earlier, managing expectations of what type of space you're going to encounter, but also I think having a little bit more of a gentle hospitality touch, and less of that like strict librarian vibe.
Yeah, that is interesting. I think you bring up a really interesting point about just because it's the same brand, it doesn't mean it's the same vibe, right? As you said with Piloto Mail, every space has its own vibe. They even have a whole event space for breaking that out. I think it's going to be really interesting to see how operators communicate that, right? If you were induced and introduced in another space and you're like, oh yeah, this is totally my jam. It's all salesy. We're all kind of out there killing it. And then you move to a space in another city, another location, and it's not like that. Whose fault is that, right? This is a really interesting debate to kind of figure out. I totally agree with you. It could have been handled so much better, even if it was breaking the rules, if it was a repeat
Yeah.
violator. And like, as someone who's run spaces in the past, that is the key upsell capability. This is great, but wouldn't you have a better sound quality if you could have a whiteboard while you're selling? Or, we have one person private office. It's better than a meeting room. You can use that. We'll even throw in some meeting room time or throw in a free event. Like, there's so many upsell capability options there. And I think this way it did not help the space at all to create this animosity with the user in that way. Okay, so there was another topic, and I'm biting my lip here because I'm very, very biased. And it goes back to kind of community managers being able to do their job and kind of focus on providing that hospitality. Maybe the community manager, as the folks said in the previous post, it was 6 p.m., they were logging out. Maybe they had just burnt out for the day, right? Maybe they just had so many things they had to do that they couldn't be hospitable for another 1 minute. We saw a post featuring Ben from Workbox where he talks about why they made this decision to integrate a census and OfficeRnD so that their community managers could focus more on hospitality, providing service to their members, instead of onboarding folks into different systems that they needed when they kind of joined the space or joined a company in their space. I'm very, very biased because I was in that video with Ben, but I'd love to hear your thoughts, gentlemen, about what you think about this whole idea of spaces choosing a new way of integrating software.
Yeah, I can probably jump in here, like being involved in quite a few conversations from this aspect, and like both knowing you and Workbox as well. I think there is definitely like a good level of needs for co-working spaces to better integrate all the systems that they're using. And if, in my personal opinion, if they can rely on people who are focused specifically on advising them how to integrate those systems, following all the processes and knowing the market and the needs and all the systems that needs to be involved and be connected, I think it can be of great value for operators, because we have seen also like examples where they try to build something on their own. Sometimes it doesn't work well, and then they get disappointed from two systems. While actually it's the connection that is not set properly. And as any other business, usually, at least in my opinion, if you're using someone who is paying attention to the detail and specifically the work they're doing, it's better to use an expert versus just exploring yourself. Or if you're exploring yourself, you need to be aware that you're taking the risk of failing multiple times before you get there.
Absolutely. And that's spoken like an absolute product guy, to be honest. It's really interesting because, I mean, I was involved very early with the conversations with Workbox around this thinking. And it became very, very clear that they were super happy with their management system, and they were super happy with the tech solution they were bringing into network management and the opportunities it created for better revenue optimization, growth, optimizing the community manager's time. But they wanted to move fast. And that's one thing we're seeing repeatedly now in the industry is people want to start connecting things really, really, really quickly. And they want to be able to know that it's not going to tarnish their reputation or their relationship with the solutions that they want to connect. And that's what we found really, really interesting about this. Ben says it a lot better than I could. So definitely go and click on that link and have a listen to what we discussed there. But yeah, I could geek out about integrations all day and every day. Anyone who knows me can attest to that. So I'm going to move on to the next topic. Mike, what else would you like to dive into this week?
There was a survey that WeWork rolled out focusing on mid-sized companies, and I think a lot of times enterprise gets all the attention. All these large aggregator players are always trying to chase after the household names, but in actuality, the largest opportunity for the marketplace is in mid-sized companies, right? So it was really interesting to see some of the stats that came out of the survey that they ran on LinkedIn. It showed that cost-effective lease terms dominated decision making at 45%, based or followed by location and commute ease at 23%, while scalability and flexibility ranked third at 21%. When this was asked, what are the top considerations for selecting office space? So that was really interesting that, of course, cost effectiveness was more than double what the flexibility was. So it's been pretty interesting. Workplace experience, however, ranked lowest at the bottom of the list for their priorities. So financial considerations are really still the driving force behind a lot of these real estate decisions. So yeah, you want to provide a great service, but at the end of the day, they're really, and I don't see any change in this. In fact, I see it happening more now than before, that it's going to be cost consciousness. How little can I spend for any type of workspace for my folks?
That is interesting. And some context around this, I think WeWork mentioned that it was also the poll was targeted at brokers, asking them what mid-sized companies are asking for. I found it pretty interesting that they amenities and collaborative spaces and the workspace experience came so low. But I'm also wondering if it's just because it's implied, right? We're getting to a point now where it's expected that a space comes with specific amenities, it comes with specific benefits, it comes with specific access, lounge spaces. Like maybe that's kind of why it skews it, because I think it was also done through a LinkedIn poll, which is choose one of the options, right?
Yeah.
So not a very quantitative analysis, but just interesting to kind of see what the number one priority, what is top of mind for the brokers that they believe their customers are looking for. And I would love to go and ask their customers, is that actually what you asked? But that's going way too down the rabbit hole.
Well, it's a great point that you make, though. I'm glad that you added that bit, because there's a big difference, and I still find it, even though I'm not focused on occupier business now, there's a big disconnect between what they think they want and what they really want. And so getting the brokers to respond, I think it takes out some of the biasness, because they're, at the end of the day, they're the ones that are really fielding what the requirements are. I think you hit the nail on the head. Amenities are just now assumed. It's kind of like what the LEED certification program used to be 20 years ago. It was like a big to do if you were a LEED Platinum building. And now it's kind of like, well, why aren't you? It's just like the assumption is, well, of course you'd want to have an energy efficient, sustainable, responsibly built building. But yeah, I think it still reminds us that location is the name of the game.
I think
Yeah.
the Office R&D team actually did a similar poll or research while they were building out Growth Hub, asking kind of folks why they picked specific co-working spaces. Is that correct, Rado?
Yeah, it was actually really interesting to look at that survey, and probably I'll put my product hat again. And I think what we see with that survey, because it was done with the brokers, we see more what the buyer is interested in and how they prioritize their decision-making criteria. What we did a couple of months ago was to do a similar survey, but within individuals who have used co-working spaces in the past 3 months. So we asked them, what are your main decision-making criteria? And actually it was location, and how convenient actually the location is for, if it's a single person, how close it is to home, so they don't have to commute at all, or even it's a group of people, how convenient it is for the group to gather and work from somewhere. And what was probably most surprising for me in that survey, because number 2 criteria was price, amenities, design, almost with equal percentages. But what was interesting is that a lot of people were, okay, the price is maybe not that important for me if I'm looking for a desk or a meeting room. So we were not serving people who are interested in offices that much. And the price was not that big of a factor for those two groups, like individual people who want to use a co-working space, or just small teams or small companies. So a bit of a different perspective. And actually design or the vibe of the space was among the top 3 decision-making criteria.
That is very interesting. And it goes a little bit counter to what the brokers are saying, but I can completely see, we're definitely seeing this flight to quality. Folks want better amenities. They want that. It's not price sensitivity. It wasn't price sensitivity on the individual level. I think that's also skewed by who's paying for it, right? Brokers are representing kind of more larger outlays or requests, whereas the individual, they're getting it through some sort of app, they're getting it reimbursed, they've got some sort of allowance, and as long as it fits under the budget, it doesn't bother them much. So it's interesting to kind of see
agree.
that duopoly kind of play together. Mike, where did you want to take us next?
Well, I was going to say, speaking of locations, that's really great segue into one of our next posts that we've got included in this week's newsletter, which is the COO of IWG announced that they are now larger than the next 10 competitors combined when you take into calculation just shy of 4,000 total locations. Which makes up, their entire group with a multitude of different brands. I believe they've got almost another 1,000 in the pipeline. So they're really just rocking and rolling and chugging along there. But, to your point, what we were just talking about with WeWork, if it's the name of the game is still predominantly location, IWG has really proven themselves to retain that network that they had grown. They lost very few locations in this most recent kind of cycle, if we can call it that. But they're also where all of the people are currently living, right? They've got a lot more of that suburban reach, which is, I think, kind of the holy grail for what some of these other operators are trying to solve for. So it's just really interesting. They're the longest player. They've been around. They've been through ups and downs, and so I think they just learned some of those lessons before some of the others did. So should be interesting to see what their growth continues to look like.
Absolutely. I think what will be really interesting to see is what their growth looked like coming out of their most recent bankruptcy. For folks who maybe don't know the industry that well, a couple of years back, IWG went through a bankruptcy itself, allowing it to kind of keep its strongest locations, drop the rest. Sounds very, very similar if you've been watching what's happening with WeWork. So if we can see that trajectory of how the model changed, how the business changed, how this kind of group effect kicked in after that bankruptcy, could we see a similar play now that kind of WeWork's gone through the restructure, it's now a private company? Could we see a similar playbook coming down the chain there? It'd be very interesting to see how that compares. But yeah, it all comes down to, how are they growing so fast, right? There's a lot of different strategies they're playing in at the same time. They're doing landlord partnerships. They're doing a bit of franchising. They're doing a bit of kind of licensing. They're acquiring small networks. So all of these things are all playing into a pretty strong strategy, which is just really interesting to watch from a number of locations wise. Of course, whenever you have an outsized gorilla in the room that makes everyone else look like little baby sea monkeys, what is that? How does that impact the whole community, right? Is every decision going their way? Are they defining categories? Luckily, I think we're still playing on even playing fields. I think they said, what was the total? 3,000 something locations. There's 40,000 global locations of co-working spaces, given rough estimates. So the biggest compared to other brands, but not the biggest, that they have 50% of the entire market share. So obviously kind of keeping that in mind when we talk about the size of this chain, it's big, but it's not the whole market. So keeping that in mind as well. Anything else you guys want to add on that stats? It's just remarkable numbers. I mean, comparing it, seeing Industrious' logo down there, kind of tiny. It's just a fantastic graph. An absolute, poking the other bears, or the baby bears, if you want. With that post is very interesting to see what it is, but also could be a strategic move for them to acquire some of those smaller brands, right? We are seeing huge roll-ups happening in the ecosystem right now. I know about 4 or 5 different groups out in the APAC region who are acquiring, looking for acquisitions, looking to be acquired. So there is strategy behind that post, and it is coming from one of their execs. So read it kind of between the lines and see who's maybe in the bottom 10 of those lists. For what may come down the pipe later. It's all strategic storytelling here from IWG. On the topic of IWG and public companies, 2 public companies in our industry shared numbers this week. We had WOTSO over in Australia, who are in Australian listed REIT. They own a brand called WOTSO Flex Space. They reported in Q1 that their revenue is now up 9%, hitting a total of $15.8 million. Attributing to that growth, Jesse Glue, their CEO, pointed it at their little tug engine or their growth engine, which is their flexible space business. They said that they're getting better premiums, better attention, better revenue per square foot than the rest of their traditional leases. So just a good sign for how public markets and a publicly traded company are looking at flex within their portfolio. Always good to kind of see these public numbers and kind of assessing where do you sit in there. Going back to IWG, Mark Dixon also shared their full year 2024 results, saying that they're now the results of revenue across their system in 2024 was up to $4.4 billion. He did say that this geographic spread that Mike mentioned earlier actually helps them be more steady if the market gets a bit choppy in 2025. So we are definitely seeing IWG position themselves for a potential shift over to a US stock exchange listing. If you go back to the newsletter a couple of months ago, I hinted that some activist investors were trying to push that to happen, delist in the UK or kind of relist in New York. We could see that coming down the pipe, and we'll be curious to see what happens when that kicks in. I've been talking for a whole bunch of time now. So anything else you guys want to dive into before we hop out for the week?
Yeah, I think that's it. That's a jam-packed week. Plenty more in the newsletter to read, as always.
Amazing. So folks, if you wanted to see more about what happened this week, hop over to thisweekincoworking.com, click on week 11 of 2025, dig into the newsletter. If you're not getting the email version, that is the best version. It has all the summaries, all the links, everything landing in your inbox at 6 a.m. every Thursday, not Tuesday, Mike. I almost gave myself a heart attack. So every Thursday that lands in your inbox. Thank you, Mike, for joining us. Rado, thank you for being our guest host this week. Well done on the podcast. Fantastic to hear and see you. I'm sure we'll hear more from you in the next couple of months.
Thanks, Hector.
Take care, everybody. See you next week.